Welcome to African Knowledge. My name is Clyde. Thank you very much for watching. Tonight we'll be talking about economic empowerment. We know that it is very important for all of us, especially in these very, unstable and challenging times that we develop the ability to create wealth and not just rely on our jobs because jobs are becoming not only scarce but increasingly difficult to keep, and things can change anytime. When you think of retirement, you think of wealth creation, all those things are very important. So that's the topic for tonight, and I will develop that with my guest, but you find out about her straight after this. Thank you very much. Economic empowerment is important. I just said in the beginning. So we'll be talking about this topic tonight with my guest, who is none other than Wadzanai Nenzu. How are you, Wadzanai?
Hi, Clyde. It's lovely to be here. I'm excited to have this
That's very
conversation with
good.
you.
I'm
Yeah.
even more excited than you are, believe me,
Well, that's good. Looking
because I know
forward
what
to
you're going to
it.
be talking about.
Yeah,
And it's about economics, it's about wealth building. But before we get there, tell us a little bit about yourself. Introduce yourself so our viewers know a little bit more about you and your story.
sure, of course. So Wadzanai Nzo is my full name. AKA a lot of people call me Wadzi. You can call me whatever you feel like, Wadzanai or Wadzi. I'm originally from Zimbabwe. So I came to Melbourne, Australia 20 years ago now. And I came to do my university. I went to Deakin University. I did my Bachelor of Commerce there. And then after that, straight after that, I did my Masters of Accounting. And I've pretty much been working in the financial services world for the past 15 years now. I can't believe it's been 15 years, but
Mm,
that's life.
mm,
It just goes in a second. So I've worked in different parts of the Australian financial services market, from superannuation, investing, financial planning, and so forth. And in the past kind of few years, I started a company, education company called Her Economics,
mhm.
which is focused on educating women to build personal wealth. So that's a quick overview of myself.
Well, that's impressive. You have been involved in the financial world for a while, and
Yeah.
as a profession, and then you wanted to connect the profession as well as helping people to build
Yeah.
wealth. And I guess that's very important. What led you to start economics?
Yeah.
I'm sure
So
you'll be very comfortable in your banking or financial role, but you had to
yeah.
go into the other one.
Yeah, I mean, listen, it's something funny enough that the root of it kind of started when I was a young girl in Zimbabwe growing up.
Mm,
Because I observed back then, looking around, I saw the differences between different women, right? I'd look at my mom versus some of my aunties or some of my female relatives or just women in general. And I saw so many of them were so reliant on whether it's their husbands or their family members or somebody else to kind of take care of them and their children. They lacked options, they lacked choice.
mm,
And some of them were in really, abusive, like family violence situation. And they would be, they would run away and their family would be like, "What are you doing? You don't have a job or you don't have any money. It's your husband who takes care of you. You have to go back." So I saw that growing up, and I decided that I'd love, first of all, to be more empowered myself as a woman when I'm older, but also I wanted to hopefully help women also get empowered. So
mm.
that's something that that root was there as a child. Obviously, as a child, it doesn't sound that interested, like the way I would say
Mhm,
it wasn't phrased that way, but I just
mhm.
knew that I wanted to do something. And then when I came to Australia and then I was working in the financial world, I just realized that there was need for that. Even in Australia,
Mm.
there was need for empowerment of women over here as well, whether you're looking at women, African Australian women, but also white Aussie ladies, other migrant women, and so forth. So there was a lot of lack of confidence because the
Mm-hmm.
opportunities were there, but a lot of women were not used to taking control of their own money and also taking advantage of what they have here in Australia, the opportunities there, and also actually taking advantage of things like investing and so forth. So
Mm.
I realized that I could kind of educate women and give them that confidence to start investing in shares, for instance, which is a passion of mine because there's so much potential on the share market, but too many women feel intimidated to get on there. So so I decided to start Hair Economics to educate women and empower them to actually start investing and building their wealth.
Well, that's good, but the stock market is a very intimidating world, not just for women, even for a lot of men.
Yeah, no, oh no, for everyone, for sure, I agree. It's something that it's a place which, because a lot of people understand things like, let's say, property.
Mm.
Property is the type of in area where a lot of people, it's like it's brick and mortar, right? You can see it, you can touch it, and it's something that a lot of people are more comfortable with. The
Mm.
share market is something that's a little bit, it's very vague for people. It's something they can't touch, they can't
Mm-hmm.
see. And it's also very hyped. There's a lot of too much hype on the share market.
So,
There's always dramatic stories about it. It's gone down today, tomorrow something else has happened. And also, you're gonna laugh, media itself, as in like when you think of movies, when you think
mm.
about Wolf of Wall Street or movies like that, a lot of people see that and they think that's the version of what a share investor is, whether it's like some day trader who's trying to beat the market, or things like that, and they feel intimidated because they can't imagine themselves as the Wolf of Wall Street.
Yeah, yeah.
So, but that's actually not very representative of majority of how people invest
Mm.
on the share market over the long term.
Well, for someone like me, when I hear stock market, the word that comes to my mind very first is crush.
Oh gosh, it's so funny. Okay, do you know what?
Yeah,
I love it. I'm glad you brought that up because a lot
yeah,
of people was like, "Oh my God, the stock market, it's so, it could crash any moment, whatever."
yeah.
Yeah, it could crash. However, one thing that a lot of people don't actually know about the share market, or maybe they do know but don't really understand it. But if you look at the stock market, let's say, for instance, the Australian stock market, in the
Mm.
past 100 years. There's a graph I love to show people of the Australian stock market or share market from 1900 to
Mm.
2010.
Mm.
And if you see that, you can see in the long term, it's just gone up. It's been going up. But in the short term, you can see a lot of up and down, up and down,
Mm.
up and down. So in the short term, the share market can be quite volatile. And even, it can crash, like, for instance, when something happens, like, for instance, COVID last year, March, April, or, the GFC,
Mm-hmm.
2008 and so forth. But what you should know about the share market is that even in big events like World War, the Great Depression, GFC, it always eventually rebounds.
Mm-hmm.
So it doesn't stay crushed. It crashes, but then it comes back up again. And
Yeah.
with over the long term as well, it generally just keeps on going up. But it's more, a lot of people also don't understand that, especially for most people, the share market is, if you're looking at it as a long-term vehicle,
Mm.
that's where the power actually is for the share market. Because over the long term, if you look at other asset classes like property or cash, or fixed interest, things like government bonds and so forth, the share market over the long term has outperformed all of those type of other assets.
Mm. Mm.
So that's where the power is with the share market. It's not really in those, let's say it's crashed today, or something dramatic has happened tomorrow. It's more over that 5 year, 10 year, 20 year, and what you can actually do during that period and how much your money can work for you compared to it just sitting in a savings account.
Yeah, yeah.
Yeah.
So I suppose when we're talking about investment, usually there are two main vehicles that people use that has helped them to create a lot of wealth. That's real estate and stock market, isn't it?
Yeah, exactly right. Those are definitely probably two of the most popular ways that a lot of people use the share market. I mean, if you look, I'm sorry, the way people build wealth. If you look at a lot of kind of the wealthiest people, whether
Hmm.
it's in Australia or overseas or anything like that, what they do with the money they have, and there could be people who are wealthy in all sorts of ways. They were wealthy whether because they are CEOs of companies and they've gotten a lot of money, or they are entrepreneurs, like they're business people and stuff like that. The way they take care of that money or grow that money further is using things like the share market, using
Mm.
property. They are looking at growth assets as a way to grow that wealth. So a lot of those people usually don't have most of their money in cash, because cash doesn't really do much just sitting there. So they try to take advantage of growth asset classes like shares and property to grow that wealth over the long term. And that's why they're wealthy, compared to a lot of other people who might have most of their money in shares, or sorry, in cash, or who might just have maybe only like a property, like, and that's it.
Okay.
Um, yeah.
No, no, go ahead. Go ahead. Let's finish your
Yeah,
sentence.
so I was saying, in terms of growing wealth, a lot of people are absolutely intimidated by the share market because of the crashes we were talking about before.
Yes.
But if you're to look at, the potential for growth or for wealth growing, it is one of the biggest potential for that for people as well.
And when you speak to people in general and women in particular, because your work in economics,
Yeah.
as it is suggested, is about female. Do you find them already having some level of knowledge of the stock market, shares investment, or it's kind of nothing really, and you have to go from scratch to educate
Um,
them about that?
most ladies that I talk to, they are interested in the share market. It's something that they know. They seem to know that there's potential there, but
Hmm.
the intimidation level is so high that most of them have never really tried to learn much about
Hmm.
it, because they actually really didn't think it was a possibility for them. So it was more like, oh, okay, it's something that I might be interested in, but I think it's just too much. It's not something that I can really do because it's just too complicated, and so forth. So a lot of them don't know that much, I would have to
Okay.
say. So, and that's where my focus is, to be honest. My focus is those people who are true beginners, who don't really know how the share market works, and even some who don't really understand what a share actually is.
Mm, mm.
Yeah.
And I suppose, and is that the same with African Australian women and the rest of the women in the broader
Yeah.
Australian society? Because your organization is not just for African women;
No,
it's
yeah. So it's
anyone.
just for women in
Yeah, it's just for
general,
women. So, but that
especially
knowledge,
Australian women. Yeah.
yeah. Did you find that? Because when you speak of Africa, I remember myself when I was still in high school or even uni back in the Congo where I come from. I mean, you watch the news from Europe mostly, or the US, but we're watching mostly French television. Lots of these financial reports, which we didn't really understand much at school. We learn a little bit about
Yeah.
shares and everything, but all these other things about investing and the indexing and all that sort of thing, we didn't learn much. So people, and because it's not something that uh, in Africa, I think many countries until recently didn't even have a sort of a proper stock market
Yeah.
sort of
Yeah.
system. So I would think many African Australian people, but whether it's women or men, would have very little knowledge of the ins
Yeah.
and outs of investing.
You're totally right. the people I've met personally, the African Australians I've met definitely don't have much knowledge, and that is both men and women. There's more of a intimidation factor from the women I've met compared to the men.
Okay.
The men might be like, oh, they might not necessarily know, but they seem to be more willing to give it a go, even if
Mm-hmm.
they're not really sure. Um, Whereas a lot of the women that I know, they are very intimidated and they just don't actually jump in. I mean, there's
Mm.
statistics to showcase. I mean, it's starting to improve for sure. A lot more women, especially in the last year, the statistics have shown that majority of the new investors on the share market have been women, which is great.
Okay. Yeah.
But if you still look at the percentage of women and men, and that's just women in general, not just African Australian women, there's still much less than men on the share market. So in terms of the difference between African Australian women and other types of Aussie women, like white women or other migrants, to be honest, you'd be surprised how closely they are. How similar they are.
Mm-hmm.
So a lot of I've looked at all sorts of other women from different places, and to be honest, most of them are just intimidated. Even the ones who've lived here all their lives or have been surrounded by, maybe, I don't know, maybe more information and so forth. It's just been too much for them that they've never really taken notice of it.
Mm.
They've never really tried to learn about it. So actually, a lot of people and a lot of women, all in general, whether it's African Australians or Aussies born here or anything like that, they just find it intimidating, Clyde. They just have never really tried to even think that it's a possibility for them. So they can be amazing in a lot of ways. They could be business women. They could be
Mm.
doing all these things, but for them, the thought of the share market is too much.
I suppose one of the reasons why that would be a bit hard for anyone, and even more for women, is, as we mentioned earlier, people know about real estate as a very good
Yeah.
investment vehicle, and once you buy a house, or a piece of land, you don't necessarily need to invest a lot in pursuing that. I mean, the value of the land or the house generally would develop without you having to do much. But with shares, there's a bit of investment that you have to make in continuing to watch what is happening, make decisions, understand what is happening. I suppose that's probably why many people don't use it, is it? Because you do need to be
Well,
fully involved.
yeah, well, this is the thing as well, though. So there's a lot of kind of, I guess, misunderstanding about how much effort you need to invest in shares. There's
Yeah.
different types of ways to invest in shares, right? So there is the more kind of time intensive ways, like for instance, if you want to try and beat the market, those day traders who are
Yeah.
jumping in and out, looking at the daily prices and everything. That's a
Mhm.
full-time job. That's Most people just don't have time for that, and that's not what most people do. But
Mm.
then also you've got people who are actually doing direct shares. So buying like directly from a company, deciding which company you're going to invest in. There's a lot more, I guess, research that you need to do around that to figure out the company. Like for instance, whether it's Amazon when it was starting out, and you look at Amazon now, it's like $3,000, a
Sure.
share and something like that. So you try to choose the next Amazon. There's a lot more, I guess, research that you need to put to try and choose the right companies for sure.
Mm.
However, there is also on the flip side options where there is less that's required of you. So if you look at indirect share investing, so things like ETFs, exchange traded funds,
Hmm.
or things like managed funds. So a lot of people think that there's only one way to invest in shares, that's directly and actually having to choose the companies yourself. Another very kind of popular way that a lot of people are jumping into the share market is actually indirectly through managed funds and through what are called exchange traded funds, which is a type of managed fund. So what that means is you buy this managed fund, and the fund expert or the fund manager is the one that actually makes the decisions
Mm.
of which companies are within this are invested. under that managed fund. So
Yeah.
you don't have to make those decisions. They do. You pay obviously an ongoing management cost on that,
Mm.
but the advantage of managed funds and exchange traded funds is, first of all, if you don't have the time and you just don't have the expertise to keep on track on what's going on, you can have somebody else do that. Or there's even a better way, which is even less work, which is index funds, or
Mm.
a lot of exchange traded funds are index funds here in Australia, where you're literally just tracking the Australian share market, or you're
Mm.
tracking a US market. So remember how I told you the Australian share market over the long term has just been going up? You can just decide to buy an exchange traded fund that follows the Australian share market and just
Mm.
leave it and do nothing, and just either put a lump sum and leave it for 10, 20 years, or keep on adding to it, right? But you don't actually have to really think about what's going on with the Australian share market because you've bought the whole market. And so there's very little effort in that. But also, so the effort in investing, I guess, depends on your level of interest. So you can be one of those people who's into, because a lot of people love, and also your goals. So a lot of people love, some people love the research of companies and also love to actually choose the companies, then to be in control of the companies they invest in. But
Mhm.
also it allows them to potentially, find the next Amazon, and it gives them that opportunity to do that. So people like that can do direct shares and put more time and effort. And then for most people, majority of the people who've got other things they want to be doing, they take advantage of exchange traded funds or index funds or something like that, where they can just invest and park it pretty
Mm.
much long term. So there's different ways of investing in the share market. A lot of people only know one way or something that's very time intensive. There's actually some which are not very intensive. And then back to property, a lot of people automatically think that, property, you just invest in the property and automatically it's going to give, it's going to be a profitable investment. A lot of people
Mm.
actually lose a lot of money in property because, first of all, they might not necessarily buy in an area that's, doing that great, but also they miss or underestimate the other additional costs that a property incurs over its period, over the next 10 years, 20 years. And
Mm.
when you take those costs into consideration, plus the mortgage and interest rates, a lot of people actually make a loss, but they don't really mind because they are staying in that property.
Mm.
Obviously, for people who are doing property investing, they might be more intentional and try to actually make a profit. But a lot of people actually don't really make much of money from the property market, which is interesting. So yeah, and a lot, and I guess a lot of people sometimes are surprised by how much, especially if you're trying to make money with property investing, not just buying your own home, how
Mm.
much you actually have to try and know and make specific decisions that will actually really help you make money in property, because it can actually be more of a money drain over the long term as well.
Absolutely. So, what are some of the things, if we can sort of get a crash course on on share investment from you for the next 5 minutes? I mean, tell us a few little things that you tell your students, the people you work with, that we need to know. And I understand, obviously, you've already started. Um, you mentioned a few things already in a sense that, for example, people think that they have to be really involved in the investment. Well, that's not always the case. You can go through a managed fund sort of thing,
Yeah.
but give
Hmm.
us a few 3-4 options for someone who may be interested in looking at shares as an avenue, as a vehicle for investment.
Sure. Okay, so one big thing that we forgot to mention at the beginning,
Yeah.
this is not personal advice, people.
Okay. Yeah.
So
Yeah.
we forgot
Absolutely.
to do the disclaimer.
Uh
So
huh.
what I'm telling you today, don't go rushing out there saying, "What's he told me?" and I'm going to do this. You need to take things into your own personal context. So all I'm saying today is general information and
Yeah.
educational information. So if you need personal advice, go to a financial planner, okay, and
Mm.
get that. So in terms of what you just said, Clyde, one thing that I love to say to people is I am a big believer in getting some basic knowledge first of all, before jumping into the share market. So you've got too many people who just hear, oh, the share market is the place to be, and then they just start buying shares. And by buying shares, I mean somebody has told them, and by somebody, I mean some random work colleague or some family member, somebody who actually doesn't really know anything, told them about a company that someone is talking about on social media, and then they buy shares in that company. Or they tell them, oh, this company is on the news, it's going to be big, and then they buy. So I think people need to get basic understanding of how to actually choose companies to invest in. So I always recommend people get some sort of basic education. And that can be, so the ASX actually has a share course for beginners. So a lot of people don't know this, but the Australian Securities Exchange, that's the Australia stockbroker, or sorry, share market or platform, it actually has an education center. And I always send people there because it's something that you can just actually do for free. And so if you just say ASX shares course, you can go and get basic education on shares. So I think it's important to have some basic understanding of what shares are, what the share market is, how it works, the risks involved. So every type of investment has a risk. So you have to be trying to understand how to minimize your risks when you are investing in anything, whether it's property, whether it's shares, whether it's anything else, or whether it's a business, right? So get a basic knowledge. You don't need to be Einstein. When I say basic, I mean pretty much basic, a basic course of some sort. And then the minute you have that basic course, just start. So a lot of people overthink. They are trying to time the market. They're trying to like, okay, I should wait until this big crash has happened, or I should wait until this has happened. But what actually the power of the share market is timing the market. So generally speaking, the longer you are in the share market, with a specific portfolio, or whether you've bought an ETF which holds like an index which is following the whole market, you're in it, and you're able to take advantage of the growth of the share market over the long term. If you try to kind of second guess yourself and try to wait, I've had people who've been waiting months or even years for the perfect time, and whilst they were waiting, the share market has gone up. And they would have made a good, like for instance, if you look at the last year, the share market has gone gangbusters. You had people who were jumping ship because they were like, oh my God, things are going down, but the share market actually rebounded and did well. So time in the market is important. So just start small. It doesn't have to be a large amount of money. So nowadays, another thing I tell beginners is there's a lot of options online for people who are just starting out, who are not comfortable yet to actually make their own decisions. So there's things like Raise, RAIZ is an example of one of those platforms. It's a micro investing app, which allows you to actually invest from as little as $5 into ETFs, or exchange traded funds. And it allows people who don't have enough money from the get-go to just tip their toes into the share market and start learning more about it. So get some basic education, and then just start wherever you are. If you don't have that much money, you can take advantage of micro investing apps. I recommend, though, any type of app you're going to use, or any type of platform, do your own research and make sure that it's what you're looking for, and also that it's legit, because there's a lot of scams out there. Read the product disclosure statement of anything that you're going to invest in. So the PDS it's called PDS, product disclosure statement, just to have clarity about what exactly the investment is and what the risks and the costs are. And also make sure, in Australia, a lot of them are like, they're supposed to be authorized, supposed to have authorized numbers and an authorized type of business. Make sure that they are. So that's another thing as well. Be very careful about who you get advice from and who you get education from. So that's why I always talk about the ASX course, because it's something that's actually a legitimate course. Of course, I have my own course as well. So the course, if you're going to do a course with anyone or education, make sure it's somebody who has the qualifications, the experience, and also the knowledge and what they're talking about. So make sure it's not just some influencer who, the other day was, flipping burgers at McDonald's, but they now have 100,000, followers on Instagram. And then you're taking advice from them. So be very careful about that. And when you're going to get advice, get it from an authorized financial advisor or financial planner as well. So yeah, that's kind of, for me, I always say to people, just start small and then build up with time.
Absolutely. Well, let's take a little commercial break and we'll be right back.
Sure.
Welcome back. For those who have not watched from the beginning, we are talking today about economic empowerment with Wadzanai Nenzu, who is in this field and who works with women. She runs an education company that educates and empowers women to invest in shares. Shares is obviously one of the best vehicle for building wealth. And although in our communities, people are not always aware of how things work, but a lot of people have been using stock market to create wealth, to make money. And Wadzanai has a mission to educate women in particular on doing just that. Now, one thing I suppose, Wadzanai, I would like to ask you is when people start investing in shares, I suppose first shares investment is kind of a long-term type of investment. You don't expect to put money in it and then earn big in a very short period of time. How does overall? I mean, you indicated earlier that overall shares investment usually pays off, but how do you know when to stop or when to get the money back or what sort of
Well, that's a kind of, it depends with the person, right? So people use, I guess, the share market for all sorts of reasons. So some people might decide that they want to invest in the share market, let's say for a 5-year period. Maybe maybe it's a very young person who eventually maybe wants to use the money to buy maybe a house. Maybe that's what they want to build their deposit using the share market. So for someone like that, for instance, they have a clear kind of period, I guess, that they're thinking of. I guess it's easier for them then, because then they know, okay, in 5 years, that's when I kind of want to take it out, and that's fine. That's more clear, I guess. For other people, though, they might have more of I just want to build wealth over 10 years, 20 years. It's not necessarily that they want to just jump out like in 5 years. So they've got a longer time frame. So with shares, right? So when you're looking at shares for a long period of time, what you have to understand is that you are investing in a company, right? You are the part owner of a business. So a lot of kind of people like the Warren Buffett, who is probably the most popular or most successful current investor out there. He's a long-term investor. So for him, he doesn't like to jump out of companies at all. If he's in a good company, he's like, I'm holding it forever, type of situation. And it
Mm,
grows and grows and it keeps on getting cash flow from that investment. It depends, first of all, what your goal is and what you want to get from the investment. So some people, when they invest in shares, they actually are not, they want it obviously to grow, but some of them, their biggest focus is getting an income from the shares.
mm-hmm,
So dividend income. So when you invest in shares, especially like let's say directly, you might get dividend income. So some companies pay part of their profit in the year back to shareholders, to you, the part owner of the business. So some people are very income focused when it comes to their
mm-hmm,
investments. So for people like that, they are pretty much in it for as long as the company is in business and is able to give them the dividend income, right? So for them, it's like, well, they're pretty much holding on to it for as long as they get income from it. If let's say, for instance, a company's dividend policy changes, and then because companies don't have to give dividends, so let's
mm,
say they decide we're no longer giving dividends, or it's not kind of what they expected, they could all then they some people who've got that type of strategy might decide to take money from that company and put it into a company where they get the dividend, right? But for people, let's say, who are not really focused on dividends, they want that growth over the long term. One of the reasons that some people might take money out is if the business it changes fundamentally. So it's not looking as promising as
mm-hmm,
when you initially invested in it, something changes dramatically. And you're like, okay, this business is not the same business that I actually invested in. It's
mm,
changed for, in a negative manner. And some people might take money out then. Some people might take money out because, Clyde, they just need the money. Like an
mm.
emergency has happened.
Life happens.
Life happens. And that happens with all sorts of investments. You've got people needing to sell houses and stuff because, emergency has come up or something has happened and they
Mm-hmm,
need the money. So sometimes people have to sell some of their portfolio or maybe even all of it because a big emergency has happened and they need the cash. So they just have to do it. And that might not be obviously ideal because maybe they might be selling when it's the share market has crashed and then they are selling it usually maybe at a loss. So that might not be ideal for them, but sometimes life happens and you have to do what you have to do. There's that's why I guess it's important to get some education of knowing, first of all, how the share market works and kind of the reasons why certain people would, certain reasons why you take money out of the share market. Or it
mm,
could even be, for instance, even if you're long-term focused, if, for instance, one of your companies blew up, right? And
yeah.
let's say you bought a company this year and all of a sudden next year, you bought it for $2 and all of a sudden next year it's $100 a share. Some people might be like, okay, I'm going to take some of the profit. Like I'm just going
Mm-hmm,
to literally sell maybe 25% or 50% and take some of the profit out because I've made money and I want to actually get the profit now. So there's all sorts of reasons. It all depends with you personally and your kind of your goals and what's happening in your life. So there's no like one fit all kind of reason to take out the money or to
yeah.
sell shares. It just depends.
All right. And students that you work with, tell us how you actually work with your students. You sort of organize courses on a regular basis. How does that work?
So I've got I actually have an 8-week course that I do
Yeah.
for Aussie ladies. And it's pretty much what I feel, or kind of everything that I think is the basic foundation that they need to actually start investing in shares and to have that knowledge for them to build on it and grow with, and educate themselves further going forward. So it's an 8-week course with the basic information of, what is a share, how does the share market work, what are the risks, what are the benefits, strategies, creating, actually having a clear investing strategy and a clear investing philosophy, just the basics of actually how to actually buy and sell shares, the practicalities,
Mhm.
how do you actually do it,
Yeah.
and how to actually register for one of those trading platforms, how that works. So basics of of buying shares. So I do an 8-week course that I do. I'm actually starting. There's a course that's starting on the 8th of October, actually, and that's the last cohort for the year. The fifth, it was number 5 for this year. So it's the last cohort for this year. And so I do that every, couple of months.
Yeah.
And then I also do occasional free webinars that ladies can come listen to me just teaching about something
Okay.
every few weeks or so. I'll do like a free webinar as well. So I do like some free educational webinars, like ad hoc ones, but I also have the concrete 8-week course as well. And this is it's different from one like the ASX course, for instance, which is you're by yourself. You do the course, but you don't really have anyone to ask questions.
Yeah.
Whereas with the 8-week course I do, it's very much live classes with myself. People can ask questions. There's unlimited support throughout the 8 weeks and so forth. And there's also like Facebook group and so forth. So there's more involved and more kind of support with that course as well.
And is that for a fee, or you do it pro bono?
Yeah. So it's for a fee. So it is actually for a fee. I do like work. I think maybe we might talk about this later. I do some work with specific organizations where I mentor people or where I do educational stuff on a pro bono
Okay.
basis. And
Yeah.
I have done that with some African Australian organizations
Yeah.
like Incubate Foundation and the Monash African Society, for instance.
Yeah.
But with the course that I actually do at Economics, it's a paid course. And
Wow.
actually, you're gonna laugh at this, but when I first started the course, I trialed something and I had a few ladies who won a free spot in the course. And
Yeah.
then I had people who paid for the course. Guess who was more engaged? Guess who actually finished the course and actually took action?
Yeah.
Those who paid for the course.
Yeah.
Those
Of
who paid
course.
for the course
Exactly.
actually valued it and
Yes.
actually did the work and bought shares and actually started buying, doing, building their wealth. The ones who didn't actually get to pay, didn't pay the course, most of them didn't even turn up.
Yeah.
So, yeah.
I see what you mean. All right. Overall, I see a lot more women entrepreneurs within the African community, and I suppose you also
Yeah.
represent that sort of spirit that is rising. What what
Yeah.
what do you think is encouraging that?
So listen, I think there's a very exciting time. I mean, it's kind of been like that for a while now. This is something that's been going on for a number of years, where there is just a spirit of opportunity, right? In Australia, and a lot more, I guess, examples of what's possible as well. Because the more the ladies see, oh look, we've got a fellow African Australian has done this, and this is. I think also there's the fact that we are becoming more of a mature migrant group in Australia, more
Mm,
settled,
yeah,
and there's that increase in confidence, therefore, of actually being able to start taking advantage of the opportunities
yeah,
and be like, yeah, actually, this is something that we can actually do. Like you see other people starting businesses, and it can be very intimidating, can be very overwhelming, but you start seeing people, from your community doing it, and you can see that it's possible. And then you actually see success stories, and you're like, actually, I can do this as well. So I think there's just more confidence generally as a community, not just women, but men as well. There's
yeah,
just more confidence to take advantage of the opportunities that are here, which is fantastic. Plus, also, there's a lot of really great organizations that are really giving that education and that
mhm,
information. Even this type of platform, right?
yeah,
Giving that knowledge for people to actually know that certain courses are available, or certain
mm,
business kind of advice or things like that, or mentorship and things. Yeah, so the people are getting more information about where they can get help from and
Yeah.
assistance from. And then that's just making them even more empowered to actually take action and start building their businesses. There's some amazing organizations out there that are really great at promoting and empowering women to start their businesses. So it's been fantastic to see that.
And perhaps before we finish, you have worked with young people as well. Do you
Yeah.
see the hunger for economic empowerment from the young people, or is
Oh
there still
yes.
a lot of
Oh yes.
way to go?
Oh no, they are very interested. I think for a lot of them, they're really surprised at the fact that the doors are actually open for them.
Mm,
I think especially when you tell them about the platforms like Raise that I mentioned, the micro investing app. For a lot
mm,
of these young people, they don't have savings. Like they don't have a
mhm.
lot of money, so they're like, oh, I can't really do it. But then you tell them of these opportunities, and they are very excited and they're very much on board. I think there's a hunger for knowledge for sure, and there's definitely a hunger for financial literacy from the young people that I've dealt with. They've definitely been very very excited about it and also very open to it as well. So it's an exciting time, and I look forward to working more with young people as well in that space.
All right. Perhaps one last question. What would you like to
Yeah.
tell people out there in terms of economic empowerment, the wealth creation strategies, and everything that you do to encourage people within our community specifically, and in our community, not just here in Australia, even in Africa? Perhaps I was going to ask you a question whether you do anything with professionals in Africa, but I suppose we all need to be a little bit more encouraged to pursue economic empowerment avenues rather than everything else just that we do. What would be your message?
Yeah, listen, I mean, the message is the world is our oyster. Like honestly, it's open to you. This world is not the world of some rich people only. There's so many amazing stories of all sorts of people. And when I say all sorts of people, I mean whether it's African Australians, whether it's any other type of migrant, whether it's somebody who's in Zimbabwe right now, or someone who's in Africa or anything like that. With the way the world works with technology and kind of the globalized way things are, the opportunities for you to take advantage of building wealth, even starting small, it's there for you. It's there for you to take that step. I think a lot of people just think that they have to be this Einstein level, they
Yeah.
have to know everything, they have to have a lot of money, they have to be very smart. There's a lot of myths around investing, and they think that it's not really for them, but investing is for everyone. It's something that I see, especially in the financial services, career I've had. I've seen people of all types, women, men, white, black, Asian, whatever,
Mm.
do really well. And starting from just normal middle class, working class, whatever background, they just started to take action. And that's what you need to do. Just start taking action imperfectly. Don't wait for perfection. Start small and build on that. And with time, the confidence level and the experience just grows. But just start. Don't wait for some perfect time in the future, because it will never come.
All right, that's a very good way to end this show. It's
Yeah.
important for you to take action. Don't wait. Take action.
Yeah.
Start small and build momentum. And before you know it, you may be counting your dollars. All right.
Yeah.
What?
Yes, counting the dollars, but also like, a lot of people, it's important to have a really strong why of why you want to build wealth.
Yeah.
Like why do you want to do it? It's not just necessarily just because you want to make a lot of money, but money gives you options, it gives you
Yeah.
freedom. It also gives you a legacy that you can leave for your family and your community.
Unity. Mhm.
So yeah, think of the bigger why as well, and it can power you through.
Thank you very much, Wadzi, for your time to African Knowledge. We do appreciate the time you've given us to tell us about what you do and give us some clues about investing in shares. Perhaps we may even organize another interview later where we can go into a little bit more details about these sort of things. I think it's important within our communities that we look at all wealth building avenues and pursue them as aggressively as we possibly can. So thank you again,
I
and
agree.
we hope to see you next time.
My pleasure, Clyde. Thank you so much for having me. I've loved
No
it.
worries. All right. For those of you who've been watching, we do appreciate your time to African Media Australia and this specific show, African Knowledge. We encourage you, as usual, to share the video, to like our Facebook page, subscribe to our YouTube channel, and click on that, notification bell so you get automatically notified when we produce new content. Until next time, stay blessed and stay safe. Thank you.